And we've got, are we on, Bill?
We are now, yes.
We're not on.
We are on.
Yeah, okay. We'll go around the room and make introductions. Everybody's got signs, but we've got some new employees and we've got Monadillo here. So Gary Moore, Town of Leicester, my right.
Bill Bacon, Director of Economic Development.
Erica Elliott, I'm with Underberg Consular and I'm the IDU attorney.
Randy Shepard from Bonadillo and Company, Your Honor.
Jody DiCarlo, I've been outsourced with Maureen Wheeler, Deputy Director. Alexa Science, Development Assistant. Judy Mendoza, Economic Development Specialist.
The White House. ID Portland.
You'd like to have Board of Supervisors?
Dave DeSalvo, Board of Supervisors.
Okay, thank you. And with that, we're gonna go into the annual meeting and Audit and Finance Committee on the whole.
So we got the audit presentation from Randy here today. I want to thank him for all the effort that's gone into it, and Jody for all the effort that she's gone into straightening the books and getting them all arranged so that hopefully Bonadillo's job was a little bit easier this year. Yeah, right. You still had to deal with me. Sorry about that. But the audit is out there. It's clipped. If you look at the top line, you'll see Livingston County Industrial Development Agency right under the Board of Directors. I'll turn it over to you, Randy.
All right, great. Thanks, Bill. Yeah, so we are still in draft form with the documents. We're reviewing some of the items this morning before the meeting, just small things we're trying to clean up to get things in the right spot. Numbers wise, they're all the numbers. They just might change location on their books. Just trying to get this categorized properly. And Bill is correct. The audit went much better this year. Thank you to Jody and all her efforts to make changes and get things cleaned up. The past couple of years have been a little bit of a challenge. This is my first year back on the audit. I took over from the previous person that was there, so I'm glad to be back. A few documents that we have in front of us. The first one that's right on top is called the Required Communications Letter. And as the name implies, there's certain things that we are required to communicate to the board as part of our audit process. And so the way the letter is laid out, there's a bold item, bold caption. Beneath that explains what that item talks about, and then our response or any kind of commentaries in the italicized bold. So I'll just kind of briefly touch on what these are. The first one talks about accounting practices, and essentially the board and the organization establishes what accounting policies they're going to follow. And those policies have to be in accordance with generally accepted accounting principles. And nothing was new this year for that. The next section talks about accounting estimates, the fact that every set of financial statements has some element of estimation within it. Some are more or less significant than others. And for the IDA, there really is nothing that is significant or sensitive. Within your financial statements, they're pretty normal. Difficulties encountered performing the audit. This is important because we do work for the board, we don't work for management. So if we weren't able to get our job done appropriately, you guys don't know that. As we said, the audit went well. Part and unpart them as statements. There's a schedule at the back, which we'll look at momentarily. That just kind of summarizes the adjustments that were recorded through the audit process. And then turning the page to page 2, disagreements with management. This would be as if we said, hey, you need to do it this way. Management was like, I don't agree with that. We couldn't come to some kind of resolution. This is where we would disclose that type of commentary, but everything was fine. Representations. We will get a letter after this meeting that basically says that everything that we asked for, you provided, nothing changed from your end that would impact our opinion, etc. That allows us to issue these in final form. Management consultations with other independent accountants, that would be called opinion shopping. So if you work to another firm to work for advice, if we were aware of that, we'd need to make sure the board was aware of that, because that other firm may not have all the same facts that we had to make that decision. So we're not aware that that's happened. And then other findings and issues. What this basically says is that you're not keeping us or retaining us because of the way we answer the question. That's just part of our normal operation. That's the normal interactions that we have, which are actually very positive and very good to know throughout the year if something's happening. You reach out to us and we kind of make sure you're doing it right or something like that. Okay, so then if we look at the schedule, Exhibit A, which are the adjustments, and I think they're probably a lot less here than they have been in the past. But the way we lay this out is we start with this change in that position unaudited, which basically is when you gave us the trial balance to start the audit. That's the number we started. And we try to reconcile everything that happened at that point to the audit. And so There was an adjustment that you guys provided us, or several adjustments to make some changes. That was about 49,000. And then the current year audit adjustments you can see there. Most of them are, or two of them are related to just GASB 87. Trying to correct and record that according to those standards. We made an adjustment to record some payables at year end, and then some corrections to the signage at Mount Morris. So at the end of the day, the change in that position, which you'll see in the audit, is about -10,000 as opposed to 28. Any questions on that letter or the purpose of that? So we can touch very quickly on the audit financial statements themselves. So that should follow that letter in your packet. And our opinion is on page 1, first number page. So it takes a couple pages to say it, but the important part of it is in that first section under opinion, second paragraph. It says that the statements above present fairly in all material respects the financial statements of the organization. So that is what's considered an unmodified or clean audit. So that's what you're looking for. The rest of this opinion describes the basis for our opinion, what management's responsibilities are, what our responsibilities are. So we don't need to go through that, but again, you can look at that. But rest assured, clean opinion is what you're looking for and what we anticipate issues. What follows on pages 4 through 7 is the management discussion and analysis. So that's intended to be a high level, kind of summarized explanation of what's happening year over year. Gives the reader a little bit of education about what the statements are doing and for. So if someone wants some information, you point them to your website, point them to this section. It's very helpful for them. The main financials begin on page 8, though. So that's where we'll just touch base. I'm not 8, I'm sorry. Minor out of order. There we go. Page. Yeah, we got out of order somehow. It's very goofy. Yeah, they're printed out of order here too as well, so we'll have to fix that. But the first schedule is on page 9. That's the balance sheet. That should be the first one that we'll see when we issue these final. You see current assets about 1.2 million, 600,000 that's in cash, and you got a bunch of accounts receivable there as well, just to timing when that comes in. And the other big piece of your assets are the land held for development or sale, so about 1.6 million sitting there at year end. So total assets just under 3 million. And then on the liability side, very little in accounts payable, and the rest of it is all unrestricted. So you're using that for your operations. And then page 10 is your income statement. And you can see there where your administrative income is about 600,000. And you did have a loss on sale of some of that land this year. So total revenue is about 600,000 flat. And the total expenses are about 650. The biggest piece of that, it's sitting in other, but that was one thing we talked about this morning. Most of that 348,000 are development costs. We're going to break that out on the schedule. I think that was about 300 or so.
Yes.
Give or take.
Yes.
So that'll be a different line on there when we finalize these. So that's the biggest cost, and utilities is the other one. For overall, an operating loss of about 40,000, offset a little bit by your rental income, which is really non-operating. That's not your main purpose, is to rent the land, but you're utilizing the land that you have until you sell it. And there you can see you're changing that position of just under 10,000 for the year. And then actually, and I apologize for this, we moved backwards to page 8, which actually should be a different order, but that's your cash flow. And you can see from operations, as you'd expect, 2025, you had a lot more outflows of resources as you paired some of those properties for development and did what you needed to do. Is about $370,000 of cash went out the door. The inflows related to the rental income that you had, and so overall, your cash went down from just under $1 million to 665 for the year. Does that all make sense, folks? Then what follows is all the footnotes. We don't really need to go through those in detail, but that gives you all the, that gives you the information relative to the detail of those numbers. Any questions? No, I'm happy to address them with the board if you have any questions.
Anybody? Okay. Yeah.
I need a motion to move the agenda, to move to the annual meeting. Committee reports, and this would be for the Livingston Town Development Corporation. Okay. In favor? Aye.
LCD's gonna move over to outside.
So we gotta switch the screen, right?
Yep.